Sean Haney here with RealAgriculture.com and Real Ag Radio, Rural Radio 147, Sirius XM. Let's talk about land values. Now, we've seen a lot of, we've seen some decreases from the Bank of Canada, as you know, last week was one example or another one. A lot of people talking about farm profitability, and all that wraps up into the question, hey, what happens with land values going forward? Well, before we can look forward, let's look backwards. Farm Credit Canada is out with their annual land value report. And joining us right now as chief economist with Farm Credit Canada is JP Gervais. Hey, JP, how's it going?
It's going very well. Great to be here. Thanks for the invite, Sean.
Yeah, I always look forward to these conversations to try to dive into some of the numbers. Now, I guess let's start nationally. Overall, what did land prices do in 2024?
So the average or the increase in the average farmland value in Canada is not, I'm still going to look at my numbers because this is fresh off the press here. 9.3% is the national average. And if you look at across the different provinces, so basically the report will offer a view within each of the province, so with an average for each of the province, and it will also break it down by regions, right? So there are tons of details. You can go to fcc.ca, download your free copy. You're going to get not only a percent increase, but as well as for each of the province and regions, but as well as a range of values. So an average value, low and high, that represents about 90% of the transactions that we have in our data set. So bottom line is a very complete, detailed report. I suspect we're not going to get into all of the numbers and details, but at the very high level, still going up, right? 9.3% average growth rate at the national level. A little bit below what it was in 2023. 23 was 11.5, and 23 was below what it was in 22, which was 12.8%. Now, the one thing is that when you compute the national average, this is a weighted average. So a province like Saskatchewan, representing roughly 40% of all farm acres in Canada, is going to get a lot more weight in the national average. And so if you look at a province of Saskatchewan on average, land values went up 13.5%. Right? So there are two provinces that exceed the national average of 9.3. Saskatchewan is one of them. I just talked about it. And BC is the other one at 11.5. So BC, really high, but BC is such a unique case as well because the mix of ag is it's just such a diverse province, and even within a region, it's really hard to get a grasp. Very large variations in terms of the range of values as well. Saskatchewan is more of a consistent or kind of a province that leans on some very specific, crops is what 80% of receipts of farm cash receipts in the province.
It's a
Still
traditional
very strong
meat and
growth.
potato kind of province. Like it's tradition. Yeah.
Exactly grains, north, season pulses, and then the rest would be livestock. And then you got your provinces that are under the national average. You got Alberta comes out at 7.1%, Manitoba at 6.5%. Ontario is a little bit lower than everybody else, like 3.1%. And the one thing is, like, people are quick to compare across provinces, right? And the one thing I'd say always is this, when you compare cross provinces, same thing within if you take Saskatchewan, which is kind of a province that's very well consistent in terms of the mix of ag activities, you still have to be careful comparing within the province across regions, because you need to at least look at a couple of years, even like 3 years, I would say, because this is not a market that's very liquid. We're talking about farmland, so it takes sometimes a little bit of time for the markets to converge to a consistent valuation across the different things. So Alberta's 3.1, but I always point out, right, 21, 22, we had ranges of average increase of 20% in Ontario. So, and now we're at 3.1. We didn't see this for the other provinces. Just to round up the entire country, 7.7% in Quebec, and then a mix of diverse values or increases in Atlantic Canada, PEI at 1.4, Nova Scotia 5.3, and New Brunswick at 9%.
So internally amongst your team, I'm sure before the final numbers are calculated, you do some kind of internal betting on how it's all going to shake out. Is this at expectations, or what were your thoughts heading into this?
So there's no betting for the record, Sean. I'm just kidding. But no, I mean, we do have expectations coming in. And I may sound like a broken record a bit, because I think for the last couple of years, I've said I'm always surprised. I'm a bit surprised, right? So if you look at 2023, what stands out? Sorry, 2024, what stands out? Well, yeah, you mentioned it a little bit, right? We've seen interest rates come down, but for the most part, nearly half a year, we had the Bank of Canada rate at 5%. It's just like early June when we started to see that first cut. Then we had, consecutive cuts. I get that. But, for 6 months of the year, we actually dealt with elevated interest rates. And the one thing that stands out, obviously, is lower commodity prices, right? So again, you look at the entire prairie receipts for grains and oilseeds and pulses, there's been a decline overall in Alberta, Saskatchewan, and Manitoba together of 11.3% in receipts of field crops. You look at the forecast, I think, well, to be fair, if you had forecast when we forecasted 2025 receipts, it was basically suggesting that 2025 there was optimism in the air, right? And that's a bit of a different story now with all the trade disruptions and so forth. But the bottom line is we've seen commodity price come down. We've seen revenues come down, 11.3% decline in the prairies. And when it comes to receipts of grains, oilseeds, and pulses. So that's a bit surprising that we still end up with, in Saskatchewan, 13.1%. So I think previously I might have said 13.5, but the number is 13.1. So 13% is a very strong. So fair to say, I would have expected that those increases that we're reporting today would have been lower than that. And that's just like what the market's still very solid. I think supply, just to end on this, like supply, the role of supply of farmland being available is such, I think, is underestimated. There's just not a whole lot. And when something comes up, it doesn't take that many interested buyers, let's put it this way, to actually kind of generate the values that we're seeing in the marketplace.
I think one of the things that I've wondered about is this sort of potential detachment from farm profitability and land values. And why I say that as well is, I hear a lot of concern about profitability here in 2025. There was some concern in 24. Like 24 wasn't a rock star year, especially in provinces like Saskatchewan. There was huge disappointment when it came to some of the yields. There's like the farming operation, and then there's the land investment operation. Like, are those is it kind of more separated than ever, or like were we more susceptible previously to farm profitability where we'd see more ebb and a flow? Like, boy, like I kind of wonder about this. What are your thoughts?
So there's no denying that we've seen these two things, the farming operation, the real estate part of the business, decoupled from each other, right? And I think you can clearly see this in the index that we're going to be publishing about that, just a week after the release of the report. When we look at affordability, right? Because it's one thing to say land is obviously the most expensive it's ever been when measured in dollar per acres. You would even adjust it for the overall rate of inflation, you'd still see it in really expensive. I would argue it's meaningless. Basically, like, why do you actually discount it by inflation, right? You should discount it by the cost of inputs, or you should discount it by something that's relevant to profitability, to your point. So what we're doing is we're saying, all right, this is the price of land. This is what revenues are. And then, of course, the mix of crops in different provinces will get a different pattern when it comes to revenues. But to your point, I mean, 2024 was disappointing. Is simply, if anything, because of commodity prices. And we've seen inputs come down, but not as much. And, you look at the overall fertilizer been trending down a little bit, 24 I'm talking about, but all inputs overall kind of remain elevated. And so no doubt. And then you account for interest rates, and land is now at the least affordable point of at least the last 40 years. And in some cases, central Canada and eastern Canada, as far as you can go back in time, all time least affordable, right? When it's measured against farm revenues and interest rates, which are kind of the two drivers of that you would think from an economic standpoint would matter in terms of buying farmland, right? So no doubt, to me, that speaks to what you were saying, decoupling of, and the question becomes like, what should we expect for the future, right? And the crystal ball is quite murky in that sense, right? So I still think that we need to attach valuations of assets based off some underlying fundamentals, which are profitability. But profitability, one thing I'd say as well is that you have to be thinking about the future, right? It's not just, it's you're discounting future revenue streams. It's not just the present, which has been disappointing to your point. It's also like, again, putting aside trade disruptions, which are big. I'm not dismissing the importance of that.
Yeah.
No, for sure. I'm actually quite negative about the entire thing. But if you put that aside for 1 minute, the world still needs what we grow and will continue to need what we grow. And to me, I think that's as well what it spells out in terms of the pattern we've seen in land values. But there's no doubt it's been decoupling from profitability.
Yeah, I'm curious to any what the return on asset ratios look like. It wouldn't be that enticing for somebody to be like, "Oh, there's an opportunity," whatsoever. Um, and
Well, can I say something like so? I
yeah,
think you that's a really critical point to make. So that I think it's a unique sector, right? Can you think of a sector that requires as much capital and delivers such a small return on assets? I cannot think of any other sector that will deliver that combination on a consistent basis. So people could point out, well, mining requires a lot of capital. Yes, but look at the return on assets in
yeah.
mining. It's going to be higher. So
Forestry,
it's interesting, you know?
yeah.
Yeah.
Would forestry
And
be in there? I
I
don't know. I don't know the returns, so I can't
and
say.
I don't know the capital intensity of it. Like, but right now we're pushing that capital intensity of farming to highs that we've never seen before.
Yeah.
And so more capital, more exposure. I think we're still fairly in terms of leverage. I think, if you look at some of the debt to asset ratios, any type of financial leverage ratio would suggest that we're not stretching too much. But it's just the risk associated with farming that are quite significant. Look at the policy environment right now. And then the return on asset being limited or not that great. And so that's a unique sector. I think you have to have a forward looking positive view, which I have. I'm super positive about the outlook. I've been for a number of years. I don't shy away from that. But I acknowledge that short term there's a number of different challenges that we face.
Saskatchewan. It's leading the charge higher. It's also the province that has pretty strict rules in terms of who can actually invest in land. Is there any connection? Like what's happening?
For myself, I think it's more a reflection of if you look at again that affordability index, just looking at Saskatchewan, you're looking at the picture, you're like, oh my God, that index is trending in the wrong direction. It's least and least affordable year after year. The flip side of that is if you look in, west or east, and you're looking at relatively speaking, still land that shows up as more affordable. Again, considering revenues, the revenue profile of an acre of land, and borrowing costs and all of those type of things, it still shows up favorably. So to me, I think it makes sense that it stands out as now the policy environment. Some of the obviously, I'm not saying that there's no role, but to me, I think what stands out to me most is really where it stands relative to other provinces.
And in the time, so and some people are going to be like, wait a minute, interest rates were up. That didn't like slow things really down. But there's also a timing factor there where interest rates went up at a time, and they weren't up long enough probably to show the impacts. And there was a lot of free cash flow around because of the years that we were coming off. Am I reading that right? That kind of negated that a little bit?
For sure, the free cash flow, does it show up in all the provinces? Maybe, maybe not. I mean, I
Okay.
think it's within a province you would find as well some differences, and so perhaps that applies to maybe some regions, more than others, and so forth, within a province. But the bottom line, yeah, I do think that it's fair to say that it's hard to like you have to find a reporting period, obviously, right? So we go on an annual calendar basis, but it's I think you gotta just step back a little bit and then look at more of a dynamic type of setting to your point, right? Looking at where we coming from, where we heading as well, and no, I think fair to say we knew that this was not going to be, let's say, a super friendly relationship with the US. I think fair to say we expected that, but I don't think we expected the level of disruption, uncertainty, back and forth like this. I think I did not expect it anyway, and I think others as well. So you think of like 2025, I'm thinking, okay, uncertainty is a big deal, right? Like the one major impediment to business investment, and that includes farming, is uncertainty, right? You don't want the instability, you don't want the uncertainty. That's something that is not conducive to investing. And so I would expect a very cautious approach right now. On top of this, you have revenues that are likely to be down, right? So if you look at the forecast, we're now forecasting, in canola like down 13% from a receipt standpoint. 25 relative to 24, and 24 was down 5%. So revenue wise, we'll see how everything evolves. I'm still hoping that we can get through those relationships with China and the US. But bottom line is we're looking at revenues that are trending. So I'm expecting a lot of caution in that 25 market.
JP, we have a whole generation of farmers that have never seen land go down.
Yeah, because it's been so many years. You have to go
Like,
back nationally, early 90s to actually have a
yeah,
decline. That's just like more than 40 years. Or no, I didn't get my math right, but close to 40 years. So and in some provinces you have to go back 40 years before you'd see more than 40 years before you'd see a decline. So I'm not here to suggest that this is never going to go down. I think we've seen it. You've seen the farmland market go up and down in the US, but the swings have been a little bit larger in the US, which kind of just explains why you would also see somewhat smaller declines or small declines.
yeah.
I think long term, I'm fairly confident, but I think we're staring at maybe a little bit of disruption here short term that is going to be really hard to navigate for farming operations.
JP, if somebody wants more information on this year's report, where do they find it?
FCC.ca, we get the report. You can dive into the province, the region, got lots of data as well on dollar per acre values. And there will be the following weeks some analysis. What we've talked about, you and I, Sean, with regards to affordability. We're also going to publish maybe just in a couple of weeks or 3, 4 weeks, a bit of same kind of analysis with regards to the farmland rental market, which is also something that is quite connected to what we're discussing today, right? So all of that, fcc.ca if you want more information.
Great stuff. JP, thanks a lot for joining us here today.
Always a pleasure. Thanks.